All right, welcome back. No face cam today. You're gonna have to live with that. So let's get into it. Today we're gonna be talking about the quote-unquote stock market crash on S&P and Nas and Dow Jones, etc. So the last couple of weeks, what happened? The stock market plummeted around 19%. Okay, and people lost a lot of money. Now I'm gonna explain how you could orient yourself around this and talk about some macro, etc., etc. So now, usually, if you want to catch big market moves early, you need to understand what governments and central banks are doing. So, essentially, policies. So, policies shape where the market wants to go before it actually gets there. Now, the usual play when a government wants to bring interest rates down, they do it by printing money. Okay? They use that money to buy bonds, which pushes bond prices up and interest rates down. So that's good for the markets short term, but it's bad for the markets in the long term because too much printing kills a currency. All right. Now, how do you lower interest rates without printing money? Now, this is where it gets really fucking smart. Okay, it gets really smart. So think, big investors. Where do they usually have their money? They usually have their money either in risky assets like stocks or safe assets like government bonds. Now, if you want people to move their money into bonds, which helps lower interest rates, you need to make stocks a little less attractive. Okay? And how do you do that? By letting the market bleed a little, which is exactly what happened here. All right? People get nervous when they see that the market is plummeting, quote unquote, and they shift their money into bonds. So more people buy bonds, bond prices go up, and yields go down. Yields meaning interest rates, by the way. All that happens without printing a single fucking dollar. That's a genius move if it works. And it did. Okay? Now, extra bonus for the government. Let's say the US also slaps tariffs on imports. Boom, they collect more tax revenue. Boom, they bring the interest rates down. Simultaneously, all of that without increasing the deficit. That's a powerful fucking combo for the economy. Alright? Now, why the hell does this matter to you? As a trader, if you understand these moves before they can happen, you can position your trades better. Alright? There were clear signs of macroeconomic shifts, and those who saw it coming were ready for lower prices and, volatility. Um, Other than that, so what's the takeaway? Alright, what's the takeaway of everything that I'm saying? Well, your edge might be technicals, order flow, sentiment, but macro is the why behind the when, where, and how far. All right, because macro tells you which way money wants to flow. All right, it shows you if the market environment supports longs, shorts, or it's just fucking consolidating. All right, so if inflation is hot and the Fed is hawkish, buying every dip on tech is a fucking death wish. All right, and yeah, so. Shit, you gotta trade with context. That's what I'm trying to say. Long story short, you have to trade with fucking context. Now, another thing, just to touch up on, all right? A lot of traders, they expected a bullish market in 2025 purely based on Trump's past record, okay? So naturally, a lot of people positioned themselves, uh, with a bullish bias, but they were met with a really surprising quote unquote crash, okay? Or just general, equities were just bleeding. And yeah, so um, why did this happen? All right. It's even if Trump is pro growth, bleeding the market to drive capital into bonds could be a calculated move because it would lower yields naturally without printing money. It would create space for policy, uh, you know, easing into easing later in the year. It would restore more control over inflation. All right, so it's genius. It's absolute genius, all right? And yeah, so I guess the take is basically just orient yourself around the market via macro. All right, now let's get into some technicals. I took two trades last week and I'm going to go over them very quickly, and I'm going to really quickly touch upon what I expect from the market in the next upcoming weeks, let's say. Now, to begin with, bias was bearish, all right, because obviously this IPDA reoffered price into this weekly imbalance, and that also prompted bearish moves. And I really expected, you know, I expected it to go down to last year's low, actually, over here. I really wanted to see last year's low get swept, but we didn't have that, so yeah. Now, weekly order block over here. Bias has shifted. Now it's bullish because, yeah, I think very self-explanatory. Daily candle closed above this high. This was some daily retracement over here into this array, 4-hour array. This was a setup that I took, but I'm going to go over a setup that I took earlier on during the week on Tuesday. On Tuesday, what did I see? I expected, like I said, so this was a, let's mark out this high. This high over here was this candle's, it's an order block, manipulated up, tapped and sold over here, obviously into this imbalance and this order block and sold. This candle closed underneath this daily market structure shift, so it was all saying sells, and an imbalance was formed. Not one, but two. So this was an imbalance. All right. I traded this bearish movement. Over here, let's go down to the hourly chart. This is the daily imbalance that we were talking about. This was previous daily high. So this was Monday's high, right? Let's mark out 8 a.m. on Tuesday, which is market open New York session. All right. Let's remove this noise over here. Boom and boom. And this was last year's low that I expected to be swept, but didn't sweep. Okay. Market open. Price rallied higher. Let's go down to the 15-minute chart. Price rallied higher, swept here. Same thing on on SPY, sorry, and swept this high, tapped into the daily imbalance and sold. And I sold. I'll explain where, because price did not really re-offer over here, and the market was rallying lower pretty fast. So sweep. 5-minute market structure shift. Where did I enter? I entered on the 10:45 15-minute manipulation leg. What does that mean? Let's go down to the 1-minute chart. And yes, I did look at the 1-minute chart, and I'll explain why I did. Oh my days, this is such a mindfuck. Sorry, excuse me. 10:45 15-minute candle over here. As you can see, it says 10:45. So 15-minute candle open, manipulated into this array. Well, not an array, this is a 1-minute fair value gap, so this is an IO fed. Alright, so this 15-minute candle went up, tapped into this 1-minute imbalance, and I sold over here. And I sent this straight out to my group. You can probably see it on my Instagram. I think I posted it and I put it in my highlights. Must have. Okay, so this was an array and stops above the highs. I could have put stops here, but just for the sake of maybe 15 minutes wanted to manipulate higher, maybe into this order block. Maybe there was a 3-minute array. I'm not going to go into the 3-minute, but just saying. Okay, so I also sold prematurely over here, low lots, subs of the highs, and I scaled in over here. Now, targeted, let's go down to the 1 hour. Into these lows. Okay. go down to go yeah, 4 hour. There was this imbalance, 4 hour imbalance, as well as this one. I took full profits at this 4 hour imbalance. I didn't write it down. It was too long. I didn't want to hold the trade for that long. Okay, so I was satisfied. So around at 1 to 9, almost. You can see I sent it to my group, like I said before. All right, so this 15-minute manipulation lag, boom. And yeah, all my days, bro, come on. You get the gist, you get the gist. Anyways, could have taken full profits. Sorry, could have left runners, I meant, down to this imbalance, but I had been holding it for what? Since 10:30 to 10:45 a.m. down to, what's this? Wait, this is 1:30? Yeah, I took some profits here, left runners. Yeah, so down to 2:30 around here. I just really didn't want to keep holding, and I just closed full profits at around the 1 to 8 or 1 to, yeah, so first TP was 1 to 6, TP2 was around 1 to 8 for me. Some held, maybe. Some people in my group probably held, because I said that it might rally or trade into the 4 hour imbalances. But yeah, now that was the trade that I took on Tuesday. Now I took another trade on Friday. 4 hour imbalance array. This was the array that we were looking at. It was in discount, obviously. And this 4 hour market structure shift. Oh, 4 hour market structure shift. Boom. Okay. Now, on Wednesday, price traded into it. Boom. Yeah, sorry, this is Wednesday, then Thursday. Yeah, sorry, I took this trade on when? Let's see. On Friday. Yeah, on Friday. Yeah. So, down to the 1 hour. Friday, 8 a.m. Market open. We have completely established that price is bullish. Why? Because over here, for our array, prompted this bullish move. On the hourly, price closed above this swing high. You could say this one. The body candle closed. And price retraced. Into what? Into OTE. Over here. But I only trade New York session. So what's the array that I was looking at? I was looking at these lows. So I marked out 8 a.m. These lows over here are London lows. As you can see, 4:30 a.m. And these highs over here are London highs. So this was the area that I was looking at. I knew it was going to buy. And market open, price manipulated lower, swept London lows. All right. Was within, OTE, if you would say on the hourly. So if we want to take this, I already showed it. Let's not get into it again. Onto the 5 minute. Here's where the entry gets into, play. 5 minute imbalance, 5 minute inverse imbalance, fair value gap, whatever the fuck you want to call it. You take OTE on the 5 minute, it's in discount. And I ran a 1 to 3, or you could put stops below. Oh, where is it? 90%. Oh my days. Sorry, 1 second. Let's just adjust the 0.9. Let's put it in red. Yeah, so you could have put the stops below here and boom, targeted London highs for 1 to 4, but I put stops above the lows. Sorry, stops below the lows. Yeah, around here. So I target like a 1 to 3. And yeah. Maybe I think I closed a little earlier because was there SMT? I don't remember. But I saw this go down. I was like, bro, fuck off. I really don't need this. And I was, again, busy. So just closed. Anyways. So I won to three almost. These were the two trades that I took. Uh, and yeah, so takeaway from this video is you need to orient yourself around macroeconomics, and you gotta incorporate macro into your trading, or else you will be completely and utterly lost or just unprofitable. All right? Now, anyways, I hope that you guys found this video helpful, and yeah, subscribe, like, blah blah blah, all that good stuff. And yeah, stay blessed. Peace.